Joining me now is Macromavens President Stephanie Pomboy. Stephanie, great to see you. Thank you so much for being here. Your reaction to what's happening at the Fed right now?
Well, thanks for having me. Happy Halloween, Maria.
That's you.
I guess my sense at the Fed is, you may recall, I was saying quite a while back that I felt that the fixation on forthcoming Fed rate hikes was sort of misplaced because the real story would be the balance sheet. And that story is starting to come into focus now with this targeted end to the quantitative tightening and the balance sheet runoff. And I think what's interesting about that is it just underscores the urgency to create a source of demand for U.S. Treasuries. And as you noted just seconds ago, you have the stock market going up, but yields are headed higher. And the question is, how long can that continue, that tension with stocks going up, even as interest rates refuse to go lower? And so I think this thing with the balance sheet is really crucial because the objective is to try to figure out a way to get that Treasury, the longer end of the Treasury curve, down. And obviously, so far, the rate cuts have failed to achieve that.
Yeah.
So by creating this demand for Treasuries from the Fed, you can begin to kind of push that lower and provide some relief, not just to the economy, but also to continue to support the stock market.
Yeah, it's a great point all around for sure. Look, we're in a government shutdown. We don't have any government data. We're trying to assess where we are in the economy as President Trump and Xi Jinping agreed on some key trade terms during their meeting in South Korea. The U.S. is going to cut tariffs on Chinese imports from 57 to now 47% in exchange for China's promise to crack down on fentanyl precursors. China will also agree to keep rare earth exports flowing and to resume buying what President Trump called tremendous amounts of American soybeans and energy products. I spoke exclusively yesterday with the Treasury Secretary, Scott Bessent, about the deal and when it'll get signed. Here's what he said. Watch. Secretary, when are you expecting a signed contract or a signed agreement from the dealings in China?
Maria, we finished it. The Kuala Lumpur agreement was finished in the middle of the night last night, so I expect that we will exchange signatures possibly as soon as next week.
I mean, Stephanie, we're going to get a signed document as soon as next week. The Democrats are holding the government hostage. They will not reopen the government. We don't have any economic data. So I asked the Treasury Secretary his thoughts on the economic story right now. Here's what he said. Watch.
I think I'm very optimistic for 2026, both in terms of growth and the inflation levels. I think we're going to go back to the same environment that we had under President Trump's 1.0, where we had high growth and low inflation. You look at the trillions of dollars coming into the U.S., I think that we're going to break ground on these factories. We are seeing a big increase in productivity, and I think the job growth will rebound very strongly. And more importantly, I think the real after-tax wages for working Americans are going to go up.
I mean, these are all very positive for the American people, Stephanie. In the midst of the Democrats trying to create this chaos, President Trump came home with another, $2 trillion in investment into America. I mean, I think it was South Korea alone was almost $1 trillion. And now he's talking about $17 to $19 trillion of new investment into America on his first 10 months in office for the second term. Your assessment of the economy right now?
Yeah, I mean, this is all tremendously positive. And, if and when it comes to fruition, will be a huge plus for the economy, helping to support consumers. But right now, consumers are really struggling. You saw that underscored with the Chipotle earnings yesterday. The National Restaurant Federation just came out today with its report for September restaurant activity, and it ticked lower again, both in terms of traffic and sales, at the 8th consecutive month of declines there. So, and obviously, you see things around the subprime auto space. We're starting to see the ripple effects from credit issues there. Home foreclosure activity was up 17% in the third quarter year on year. So the consumer is really under pressure, and that's why I keep this myopic, perhaps, fixation on the interest rates story, because we need to get rates lower to provide relief to stressed borrowers, whether they be consumers or corporates. And, you know, all the things that the president is doing in terms of negotiating CapEx deals for the U.S. are tremendous, but we have a problem that's immediate right now in terms of providing relief to those strapped borrowers, which is why I think this Federal Reserve balance sheet shift is so important.
Yeah, Stephanie, real quick before you go, that's a lot of stress that you just discussed. How do you explain this melt up in stocks?
Well, I think the focus has been on the earnings story, and the earnings thus far have been incredibly positive, especially from the tech companies, which, of course, is the engine driving this market. So
for sure,
stay tuned.
Yeah, good point. Stephanie, great to see you as always. Stephanie Pomboy.